Are you someone who loves to take risk in the market? Well, then this video will make you really happy and maybe rich as well. Who knows? With more and more people coming to the market, quant small cap funds are finding its right audience. But what exactly is a quant small cap fund, you ask? Well, then this video is all about it. So, as the name suggests, Quant Small Cap Fund is an open-ended equity scheme predominantly investing in small cap stocks. The primary objective is to generate capital appreciation and provide long-term growth opportunities by investing in small cap companies. The fund started on 29th October 1996 and comes with no lock-in period. Although there is no entry load, early redemption, that is 1 year from the date of allotment, will attract exit load. The fund manager for this plan is Ankit Pandey, Vasav Sehgal and Sanjeev Sharma. The minimum amount required to invest in Quant Small Cap Mutual Fund is 5,000 for lump sum and 1,000 for SIP. Talking about returns, Quant Small Cap Fund has provided exponential returns over the period, which is more than the benchmark. In 2020, it displayed fluctuations due to the market conditions and has also given negative returns. So, what made Quant Small Cap Funds give exponential returns after the year 2020? Well, Quant introduced a self-developed strategy, VLRT, which expands to valuation, liquidity, risk appetite and time. This strategy is what distinguishes Quant from its peer. Quant has understood the market volatility and dynamics and has been able to outperform the benchmark by careful analysis of the requirements. Let us compare Quant Small Cap Fund with other small cap funds. How a fund will perform depends majorly on the fund manager's skill, strategy and the amount of assets managed by them. Moving on to risk factor, let us compare few small cap mutual funds based on risk measuring indicators like PE ratio, volatility and Sharpe ratio. It is important to note that the small cap companies carries higher risk compared to other categories as they invest in the smaller companies that are not financially stable, but they have the potential to grow remarkably in the long run. In order to understand this chart, let us first understand these terms. Let's start with PE ratio. It is often used by investors as an indicator of the market's perception of the company's future earning growth potential. A high PE ratio might suggest that the investors have high expectation for future earnings growth, while a low PE ratio might suggest lower expectations. Volatility. It refers to the volatility of the fund subject to market conditions. A higher standard deviation denotes greater volatility. Sharpe ratio. It is a measure of risk-adjusted performance. It refers to the excess return generated per unit of total risk. A higher Sharpe ratio relative to peers reflects better risk-adjusted performance. Talking about AUM, that is total assets under management. In simpler terms, it refers to the amount of fund which is managed by the fund manager on behalf of the investors. As per the chart, we can see that over the period of time, there is a huge surge in the AUM, especially from December 2022. It reflects the size and scale of the fund. It also impacts the investment decisions. But remember, these indicators are not the sole indicators to influence the investing decision. Quant small cap fund are considered extremely risky due to the volatility of small cap stocks in the market. Over the years, the fund has performed really well and has given unmatchable returns. However, it should be noted that there are no guaranteed returns. As these funds invest in smaller companies, they tend to fall more when the stock prices fall. That is why it is recommended to hold the fund for a longer period. Before investing into any mutual funds, carefully read and understand the associated risk and seek professional help as and when needed. So in conclusion, quant small cap funds are extremely risky and thus it is good for high risk investors. In the past few years, these funds have given good returns because of the presence of top performing stocks in the portfolio. So that's it for now. Thank you so much for watching this video and we will be back with another top-notch finance video. So don't forget to like, share and subscribe to this channel. Till then, bye bye.